Okay, hi guys. So in this video, I'm going to show you how to read level 2 quotes, or it's also known as market depth. And level 2 quotes are useful only in intraday trading, again for the guns strategy. And I only read level 2 quotes for when I trade setup 4 and setup 5, which you now know is when I take a setup when the market has opened. Okay, so I look at level 2 quotes to help me to decide whether or not to ultimately take a trade entry. Sometimes I may have a very nice setup based on the chart patterns, but if the level 2 quotes are not what I want, I will not take that trade. At the same time, level 2 quotes help me to decide if I want to exit a trade early, even before it hits my stop loss or my profit target. Now, I wouldn't say that learning how to read level 2 is a must. You can still be really successful without reading level 2 quotes, but by learning this, it gives you an extra advantage in the markets, right? Additional edge in the markets, which every edge helps. So I'm going to show you how I use this to my advantage. So first of all, what's a level 2 quote? It's something like this. So whenever you look at a stock, in this case, the stock is GORO, and when you bring up the level 2 quotes, you will see a bid column on the left and an ask column on the right. Okay. So what does it mean? Now the ask column basically shows you all the sellers in the market that are queuing up and wanting to sell at a certain price. They are asking to sell at a certain price. So it's called the ask. So think of sellers who are posting for sale signs. Hey, I like to sell at this price, I like to sell at that price, right? They're posting for sale signs and they are queuing up at the ask column, all right? Now notice that on the ask column, the lowest ask are at the top, all right? Sorry, it's a bit of typo here, right? So the lowest ask, or rather I would say the highest ask, are at the bottom. Okay, so you can see at the bottom is 743. So this market maker is asking to sell at 743. He's asking a ridiculous price. It's too high. So they say, okay, get to the back of the line, right? We want to give priority to those people who are willing to ask for a lower price. Okay, so they get to the top of the line, right? So this market maker Amax is asking for 724. He's more reasonable. Okay, you're at the top line. You asking for 743 is too high. Okay, get back of the line, right? So on the ask side, notice that the highest ask at the bottom and the lowest ask at the top, right? That's how they are arranged. Now, also notice that you see 1 and 4 and so on and so forth. Basically, 1 represents 100 shares. Okay, so always add 2 zeros. So if you see 21, it'll be 2,100 shares. So that's how you read those columns. Okay. Now on the left, we have got the bid column, and bids are where buyers are queuing up and offering to buy at a certain price. Right. So think of it as buyers are queuing up, saying, "Okay, I'm willing to buy at 723. I'm willing to buy at 708." Right. They are making bids in the market. Okay. Now, for the bid column, notice that it's arranged the opposite way, where the highest bids are on top. So those who are willing to buy at a higher price, great. You're the VIP, you come on top. You get the first to buy. Those who are willing to buy the lower price, okay, you stingy buggers, you want a discount, get to the back of the line, right? So that's how it's arranged. Got it? Okay. So we always look at the first level first, and then we go down to the market depth. So the first level is called level 1. If you just look at level 1, you're only looking at the first bid and the first ask. When you look at level 2, you're looking at all the subsequent bids and asks. So at level 1, you can see that on the sell side, the sellers are asking for 724. And the buyers are willing to buy at 723. So what's the difference between the ask and the bid? It's 1 cent. We call that the spread, also known as the bid-ask spread. Okay, so always notice that the ask is always higher than the bid, and the difference is known as a spread. Now, we always want to trade stocks where the spread is as tight as possible. Ideally, less than 5 cent spread would be great. I don't trade stocks with more than a 10 cent spread, because if it's a very big spread, The moment you buy at the ask and you sell at a bid, you lost 10 cents. And if your stop loss is 20 cents away, you lost half your R, half your risk is gone. Okay, so I avoid. So whenever I'm going to trade, before I click the buy button, I look at the bid-ask spread. If it's like close to 10 cents or more, I don't take the trade. But if it's like 1 cent or 3 cents or 5 cents, boom, I'm in that trade. Okay, so that's really, really important. Now, so if you want to buy a stock, and again, this applies only for intraday trading, right? When you're doing swing trading, you don't look at all this. It's only for day trading. Okay, so if I want to buy, I've got a choice. Okay, if I want to buy immediately, I will buy at the ask price. So if I click buy market order, I will be buying from a seller. So whatever the seller is asking for, I'll buy at that price immediately. So in this case, if I click buy at the market, if the seller is asking for 724, I'll buy at 724. Right? So I could buy at the ask, which means buy at the market. Okay. Now, if I want to buy, I could also say, you know what? I don't want to pay what they're asking for. I would like to buy at a lower price. So I could put my buy on the bid side. So if I say, okay, I want to buy not at 724, I want to buy at 723, for example, then guess what? Then my order will go on the bid column. And I will join the rest of the buyers while waiting for seller to sell to me at that price. Make sense? So I could buy on the ask, I could buy on the bid, or I could buy anywhere in the middle and say, okay, 723 to 724, actually there's no middle because it's only 1 cent, right? But example, if it was 726 and 723, I could say, okay, I want to buy at 724 right in the middle. I could place my order at the middle at the same time. Okay, so when you buy, you can buy at the ask, you can buy at the bid, or anywhere in between. Now, normally when I enter a trade, when I enter a long trade, I want to buy immediately. I don't want to wait. I want to get in. So I normally buy at the ask by buying at the market price. As you know, I place a buy stop limit order. So the moment my stop price is hit, it converts to a market order and I buy right at the ask price. But of course, I have a limit to protect myself, so I never buy if it goes much too high. Got it? Good. All right. Now, at the same time, if I want to sell a stock to exit a trade, okay, I could sell at the bid price. If I want to sell immediately, I would sell it to a buyer, right? So whatever the buyer is offering, I sell to the buyer. So if I click sell at market price, I would sell at the bid price. Because whatever the buyers are offering at 723, I click sell at the market, boom, I sold at 723. All right. So normally when I want to exit the trade at a loss, I want to cut my loss, I would sell at the bid by selling at the market price. Got it? But if I'm kind of like already making money and I want to take profit and I already have a lot of profit, I could sell at the ask. Sorry, I could sell at the ask, which means that I place my sell order at 725, for example, and I would be one of the sellers with a 725 ask, and I wait for a buyer to come along to buy at 725. Make sense? All right. So again, you can sell at the bid, sell at the ask, or anywhere in between. All right. Now with that, let me go on to talk about what I see. What I see when I want to enter a long trade. So again, I see a nice setup, right? I see a bull flag pattern. I see a breakout pattern. I want to enter. And before I click the buy button, I look at the level 2 quotes. I want to see a few things. Number one, I want to see a tight spread between the bid and the ask. Again, less than 10 cents. Okay? More than 10 cents, I don't take a trade. Next, I want to see prices between the bids being very close. Okay, what do I mean? Now, when I look at the bid column, I'm looking at all the buyers, right? All the buyers. And they all want to buy at different prices, all queuing up. So I want to see, for example, if the price is now at 723, I want to see the next buy at 722 and 721 and 720. So there are buyers at every 1 cent interval, which means that the buying volume is very, very tight. So, and especially if I see that the buy column has got big offers. Like for example, if I see 22, that's a big offer. 25, so 22 means 2,200 shares. So there's someone willing to buy 2,200 shares at 1207. There's another person willing to buy 2,500 shares at 1207. So with all these buyers, that acts as a support level, right? So with a lot of buyers, I'm assured that the price will not go down as easily because all these buyers are holding the stock up. Make sense? All right. So I want to see something like this before I buy at 1207. I want to see many buyers that are holding the price up. Okay. Now, but if I see something like this one, okay. So if I want to buy at 256, for example, or 255, and I see, hey, you know what, this guy only wants to buy 200 shares at 255, and the next buyer is at 244, it's far away. So the moment this guy has bought the shares, what's going to happen? There's no other buyer till 244. And the next buyer is at 240, and the next buyer is at 216. So this is very dangerous because the moment this guy has bought, there's no one left to buy at 254, at 253. So the price could easily drop all the way down to 244, 240, 216 and hit my stop loss. So when I see that the bid column is very wide, right? From one price to the next one is very wide, I do not click the buy button. If I see very small buying sizes, I do not dare to buy. Does it make sense? Because again, on the bid side, it shows me the support of the stock. Okay? Great. So I want to see prices between bids are close and big bids if possible. Next, before I buy, I check whether they are large. Number 3 is the same as I've already covered number 3, right? Which large bids are placed. These act as support levels. Okay, so again, I want to see big bids, right, that are supporting the price, and the price is very tight over there. Okay. Finally, number 4. Before I buy, I want to make sure there's no large ask orders placed above my buy order, because large ask orders act as resistance levels. Okay, so now I don't have an example over here, but for example, let's imagine, okay, yeah, this is a good example. Okay, good. So in this case, what's happening is, okay, I want to buy at 1208, for example. Okay, I'll buy at 1208. I buy at the market, right? So I buy at the market price at the ask, 1208. But you know what? I noticed that at 1209, there's someone who wants to sell 140 times, again, add 2 zeros, right? So we add 2 zeros, what is that? 14,000. Okay? So I see that at 1209, there's a market maker who wants to sell 14,000 shares. So when there's a big seller, what happens? It acts as a resistance level. So if I buy at 1208, the moment it goes to 1209 and this guy starts selling, what happens? And there's not enough buyers to absorb the seller, the price could come all the way back down again. Okay? So on the buy side, I see that, okay, there are many buyers. That's pretty good. I want to buy. But you know what? On the sell side, I've got a big seller at 1209. So I don't like to see that. I like to see that this big seller is able to sell his shares. And when I start to see this big size begin to reduce from 140 to 150, and it starts to reduce down, that means the seller is being absorbed by the buyers, and buyers are overpowering the sellers, then I'll jump in. All right, but I will not jump in if I see a huge ask above my entry price. I hope that you understand that. Right now, at the same time, once I'm in the trade and it's going up, I'm making money, I'm profitable, and before it hits the profit target, let's imagine my profit target is at $15. But at $14.90, I've got a big seller wanting to dump a lot of shares. Guess what I'm going to do? That's right. The moment before I hit the big seller, I'm going to get out of it. I'm going to close my position. I'm going to close my position and get out just in case. Right? So that's how I use level 2 quotes to make quick decisions when I'm trading intraday in the markets and when I trade the gun strategy. So before that, let me just again reiterate on what I just said earlier on, right? Which again, I may exit a trade early when I see, number one, a large ask above my current entry price and before I can reach my target price. And I may also exit a trade if I see small bids below my current price. Okay. However, a large ask combined with a large size bids that absorb the shares is fine. So again, I talked about this just now, right? And yeah, so that's basically how you read level 2 quotes. And again, you got questions, I'm Adam Khoo, feel free to ask. I hope you enjoyed this lesson, and we're going to go on to looking at more live demonstrations of how I trade intraday. I'll see you in the next video. If you like this video, do click the subscribe button for more videos. If you'd like to find out about online professional forex and stock trading courses, do visit piranhaprofits.com for international students. And for our students in Asia, we have our live stock trading and investing courses at wealthacademyglobal.com. This is Adam Khoo signing off. May the markets be with you.